What's up, you guys? Welcome back to the channel. Now in today's video, we're going over 3 electric vehicle stocks that could be a buy in 2022 and beyond. Now I do want to preface this video by saying I'm not a financial advisor. If you guys are looking for financial advice, you should look into an actual financial advisor. These are just my opinions and what I think about these 3 companies. Also, before we get into the video, for those of you who are new here, my name is Evan and I make videos that show you guys different ways of making money in the stock market. So if that interests you guys, make sure you subscribe and hit the notification bell so you never miss when I upload. Also, while you guys are down there, if you wouldn't mind hitting the like button, I would really appreciate it, and it really helps push these videos out to more people. Now with that out of the way, before we actually get into the first stock, I want you guys to know that electric vehicle stocks right now are pretty risky, and you guys should be comfortable with a variety of risks if you're looking to invest in any of these companies. There's a lot of risk and a lot of reward for a lot of companies out there, but electric vehicle stocks, at least as of right now, seem to be a lot riskier than other sectors. So just keep that in mind when we go through these different stocks. So first up on the list is actually NIO, and I'm sure you guys were expecting this to be on the list since I make a lot of videos about NIO. But at one point, NIO was actually valued at nearly $100 billion before they had actually earned a dime in net earnings. And they also flirted with bankruptcy as recently as 2 years ago, but they did end up raising money in capital markets, and now they have about $7.3 billion in cash on their balance sheet as of September 30th, 2021. They've also delivered a cumulative amount of 150,000 vehicles as of the end of November of this year, and this is coming after a record-setting month in both September and November. Both months were above 10,000 deliveries, and it seemed as though people weren't expecting this so soon, because before that, their monthly delivery record was at about 8,000 back in June, and the record in November was also coming after a really low month in October, where they only delivered about 3,700 vehicles. But as of right now, and one of the reasons why NIO is looking really good going into 2022 is because they're preparing to double their capacity, and they're also adding new models all the time. If we go back to NIO Day of last year, which was actually in January, NIO announced the ET7, and now pretty soon they're going to begin delivery of this ET7, and they're going to begin selling it in early 2022. Now, if you guys have been keeping up with NIO, or you've been following my channel for a while, you know I've mentioned the NIO Day event that's taking place on December 18th, which is only in a few days from this point, and they're likely going to be announcing the ET5, and we're going to get the specs and all the details behind that car. And so just like NIO Day of last year, where NIO actually saw an all-time high in terms of their stock price, I think NIO could see in the $40 to $45 range this year. And again, that is just my personal opinion, but I'm basing that off of last year and how much NIO spiked after the NIO Day event. Now, aside from NIO Day, NIO is also increasing their production capacity, and they're also going to begin branching out in 2022, more so even compared to 2021. You guys probably are aware that NIO's mostly delivered vehicles in China, but recently in the last few months they've started a presence in Norway, and they're actually intending to deliver vehicles in Germany next year. And there's many reasons why this is actually a big deal for a company like NIO, but one of the bigger reasons is because according to the International Energy Agency, EV sales in China and Europe led the world in 2020 with a combined total of 2.7 million units, and in their 2021 global EV outlook, the agency offered 2 scenarios for the EV sector over the next decade. They're predicting by 2030, China and Europe are going to continue leading the way with at least 16.6 million vehicles and as many as 25.3 million if government initiatives focus more on sustainability. And with NIO having backing from the Chinese government, it looks like they're in a pretty prime spot, and it looks like they have a lot of explosive growth coming in the next few years. Now, of course, this is as long as they execute all their plans and the numbers go according to plan. If they end up having some big problem like being delisted from US exchanges, that really could hinder their growth. But as long as everything goes somewhat to plan, I think NIO definitely has a chance of being one of the big EV stocks and one of the bigger electric vehicle companies in the next 5 or 10 years. Now, the second stock on this list is actually Lucid. If you guys have invested in NIO in the past, or you've heard about NIO, you've likely heard about Lucid as well. Now, Lucid actually went public by merging with a SPAC in late July of this year, and Peter Rawlinson, who's the company's CEO, actually worked as a lead engineer at Tesla, and he worked on the Model S development program for Tesla, and so a lot of people investing in Lucid have a lot of trust in Peter Rawlinson because they've seen how successful Tesla has been, and knowing that he worked at Tesla really gives a lot of people a lot of confidence to invest in his company. Now, Now, one of the differences between Lucid and NIO is that Lucid is more in the luxury end of electric sedans, while NIO is slightly more affordable. Now, that's not to say that NIO isn't luxury as well, because they are in more of the luxury end of vehicles as well, but the Lucid vehicles have a much higher price tag, and they also have a lot of other things going for them, such as having the highest EV battery range rating given by the Environmental Protection Agency at 520 miles. And if you guys know anything about electric vehicles, you know that people don't buy electric vehicles mostly based on the range. For a lot of people, that's an issue. They don't want to charge every 200 to 250 miles. They want a vehicle that's going to go just as far as a normal combustion engine. So to step up and have a vehicle that goes over 500 miles really puts Lucid above a lot of their competition. And looking into the financial side of Lucid, without expecting any meaningful revenue in 2021, the company actually said in an investor presentation in July that they expected sales to exceed $2 billion in 2022. They also have plans to introduce a new vehicle, the Gravity Luxury SUV, in late 2023, and they hope to be close to $10 billion in revenue in 2024. Now, it is worth noting that the SEC is scrutinizing several startup companies that have gone public via SPACs, and they're also looking into certain early projections and statements that Lucid provided. Now, as of right now, investors don't really know the details, but this does illuminate some risk that's associated with investing in early stage EV companies such as Lucid. But I think right now they are off to a good start, and Lucid's first car launched on schedule, and the Air has won accolades, including being named Motor Trend's 2022 Car of the Year. And it also has the highest EV range, like I mentioned earlier, and it definitely looks like Lucid may be on a path to greatness, but they still have a long road ahead of them. And with a market cap of over $73 billion just at the beginning of production, they're definitely going to need to execute perfectly to justify this valuation. Now, the last stock on the list is actually ChargePoint. Now, ChargePoint isn't actually an electric vehicle company, they actually produce charging stations. But just like Lucid, they also went public through a SPAC merger, and they've already reported multiple financial updates as a public company. Now, in one way, ChargePoint is actually somewhat opposite of Lucid. We're not really going to know how Lucid measures up to their own projections because it remains to be seen yet. But so far, ChargePoint has actually achieved what they've told investors, and they've actually achieved more than they've told investors. In the company's fiscal third quarter 2022 report released this week, management increased revenue guidance for the fiscal year period ending January 31st of 2022 for the second time since their public debut. And ChargePoint also told investors back in July in a presentation that they expected fiscal year revenue of $198 million. That's actually been moved up to a range of $235 to $240 million. They're also off to a very fine start as a public company, and they also expect to continue to be the leading North American charging network company, and they're also expanding more into Europe. ChargePoint's gross margin also increased 500 basis points to 25% in their most recent quarter compared to the prior year period. But of course, there are risks. They actually reported a larger net loss year over year, but they did increase revenue by 79%. So as they build out these physical charging ports and they increase their customer base, it looks like they're going to look towards profitability through their network subscription services, but the risks while investing in a company like ChargePoint should not be minimized. And over the next 5, 10, and 15 years, when people start adopting electric vehicles and they become more common on the roads, there's going to be plenty of competition for a company like ChargePoint, but as of right now, they definitely have a head start, and they could be in position to gain a large piece of the rapidly growing EV charging service pie, given how early they started. For something like electric vehicles, a lot of the companies that are going to succeed are going to be the ones that started early and started before electric vehicles were really adopted as the common vehicle on the road. I've mentioned in prior videos that countries like China actually want to get rid of gas-powered vehicles by 2025. Now we're just coming up on 2022, so that's only in 3 years that China wants to get rid of gas-powered vehicles. There are also states here in America that seem to want to do a similar thing, like California. They've also mentioned getting rid of gas-powered vehicles and striving towards electric vehicles and renewable energy vehicles by 2025. Now, at least to me, these are 3 of the better stocks that you could be investing in 2022 and over the next few years. I think these companies are only going to continue growing, and I think they have a lot of future growth ahead of them. Now, for those of you who made it this far into the video, I want you guys to leave me a comment down in the comment section and let me know if you guys could only invest in one of these stocks for the rest of your life, which one would it be between NIO, Lucid, and ChargePoint? Also, if you guys enjoyed the video, make sure you leave a like because it really does help out the channel. And with that said, thank you guys so much for watching, and I'll see you back here in the next one.